Hello and welcome. These two names are worth buying on the pullback for some long-term returns. They have very excellent results and have those long-term fundamentals to look at when the market is going a little bit nutty at the moment. A bunch of reasons are being thrown about. First of all, the simple fact is that there is a sector rotation going on these days. Please remember this content is for educational and informational purposes only and should not be considered financial advice. So the first name we would look at is Broadcom, ticker symbol AVGO. The company had a good quarter. They posted record revenues of around $22.2 billion. These statistics were quite toppy, and the stock took a pounding. The stock was down nearly 12% on the day earnings were released, so it hasn't actually come back that much. And a lot of that is just that there were expectations that, let's just say, the goalposts moved a little bit. We were expecting a forceful report, and we just got a strong report, they said. We were seeking fairly substantial guidance, and we got a confirmation of their previous advice. And so that's basically what you saw, and so there was just a little bit of a sell-off in the stock. The stock has gained 53% in the past 12 months. So if you bought this stock, it hasn't been a horrible investment. And what we're seeing right now is a chance for investors that may have waited out that last rally. This could be a good time to start building your position. You don't need to go all in yet, but it's a good time to take another look at this stock this summer. And you could get a chance to accumulate where maybe the market volume isn't that hot, and you're not going to see the severe changes in the stock that you saw coming into earnings. The stock's 50-day moving average is still pointing up. So that means the momentum is still there for the stock to move higher. This 50-day moving average and the stock coming back to the level are indicative of this possibly being a good buying signal if the stock can hold at this level. If it breaks that level, there's really not much keeping the stock from dropping down to maybe 360, and then below that, it could perhaps start falling down closer to 300 if it does not hold at the 50-day moving average. So there is potential for the stock to go lower, but right now it is a very good indication that you have a 50-day moving average that is still moving up and the price is bouncing down to that. There are several scenarios that may happen, but it's kind of strange that when we're talking about this, the stock is sitting just at that crucial level. There is such a need, and not just for the things themselves, but for innovation. That's pretty much the story for Broadcom here. We're in a market where maybe fundamentals don't really matter to certain investors, but this particular stock is still trading at a nice discount to a lot of the chip stocks themselves. Now the second stock is Palo Alto Networks, ticker PANW. This is a great brand to buy, especially if you have a little less risk tolerance. Company profits were robust, equities fell back a little bit, and last month the stock was still almost 50% higher than it was a year ago. It is up almost 70% in the last 3 months. So cybersecurity stocks were making a comeback as this idea of the SAS apocalypse, I think those fears are fading, and people are realizing that in a world of not only AI but agentic AI, the need for cybersecurity is more important than ever. And you really aren't going to be able to get around partnering with one of these companies that have the ability to address all of your cybersecurity needs. And that's where Palo Alto comes in. The stock hit an all-time high last week, just ahead of results. And that's been the trend we've seen for several equities. Those stocks have been sold off terribly. And so you may get the idea that investors are trying to pour back into these, but we do have the SpaceX IPO coming out next week. And as I brought up at the beginning of the video, you've got some institutional investors who may be trying to reorganize their portfolios to raise capital for that. You have a summer, which is generally less active from a trading perspective. The stock is well above its 50-day moving average. It trades around 267. I don't believe I would like to see it drop back to about 260 or 250, and I think that could be a nice spot to start thinking about jumping back in. If it breaks below 250, you might see 240. From there, the significant price movement we've observed down to the 215 level becomes relevant, but probably more likely than not, you're going to see this one retrace a little bit further. The company forecasting next-generation security ARR in the quarter grew 60%. It was up to about $88 billion. They have a 120% net retention rate, and that means we're seeing customers not only increasing their spend with Palo Alto, but also spending more overall. That's a solid mix. You have clients who are sticking around, and they are spending more on the platform. They provide guidance. They generate a lot of free cash flow. This is a story that is only beginning. And again, summer would be a wonderful time to do it because a lot of these firms tend to bob around in the summer without a real spark one way or the other. Thanks for watching. Subscribe for more.